Alright guys, another week. This is the last week in the month of October. So today is 24th, right? Sorry, 26th. So tomorrow Monday should be 27th. This is the last week of October, as you can see right there. 2025. Okay, so we'll do analysis for the week once again. Let's make sure this particular Euro USD is the one that's okay. So yes, it is, right? Let's just click it to make sure it's it. Okay, so now as usual we start off. This is Euro USD. We start off by going to the monthly to see what's happening there, just to have an idea, not necessarily because we're going to use it, but to have an idea what has been happening in the past years, to just give us an understanding of what is likely to still happen, right? And when you look here closely, this is, and put the cursor, this is 2025. This is where the market is right now. This is okay, this is somewhere around January, so the market is up here. Okay, the market is currently up here, right? It's about to sell, but let's look here. Last time the market came down, it was in October 2022. It was up here first and then it sold in October 2021. If you look here, in October 2021 it started selling, sold, right? Then this October 2021, right? Yeah. So where's 2022 October 2022, it hit there and it started buying. So now we are in October 2025. Let's see 2023 October, it sold a bit. How about 2024 October, we sold again. So there's a possibility this might sell all the way down here once again. Let's look. October sold. October, so a lot of Octobers showed it was selling for Euro USD in the last few years, right? So if you hit this point, like you can see, hit here, sold, hit here, sold, hit here, sold. It has hit here right now, and I feel it's going to sell, even if it's just a little bit. But that little bit could be a lot of big move in a 1 hour time frame. So, but let's just look at the weekly to have an idea what's happening in the weekly, right? So bring up the weekly and clearly see that okay, market went from a bearish, let's start from here. So it's the former low, lower high, then a new low. So anything above this becomes a buy. So here we have it: higher high, higher low, higher high, higher low, higher high, higher low. Has anything gone above this? Clearly not. Has anything gone above this? Clearly not. Just wicks, right? So higher high, higher low. Alright, so the former low point will be somewhere around here. So anything below this, right? Higher high, higher low. So anything below this becomes a sell, because from here it continues to sell. You can see this is just a week, right? Higher high, higher low. Nothing has gone above this, so this cannot be the, it has to be here. Anything below this becomes a sell. So weekly is still bullish on the Euro USD. Normally I like 3 time frames to be buying before I to be in sync. I prefer 3 time frames than just 2. Okay, but 2 is also fine. So let's take a look at the daily. The daily, what do we have here? Let's pay attention. Let's go back to the weekly again to make sure we don't have a head and shoulders pattern. I will miss it. Okay, we don't have a head and shoulders pattern. Okay, this is an example of a head and shoulders pattern. You can see the left shoulder, head, and this is the right shoulder. Okay, so if it breaks this neck, it's certainly going to sell. And you can see before it broke this neck, it was here. So it broke it, retest, and look at the sell. Beautiful, right? So that's for the weekly. Let's go back to the daily. Weekly is buying, by the way. Okay, so what is daily doing? This is the highest point I can see right here, right? And what was the previous point? This is it. Is there anything below it? Yes. So highest high, higher low. Instead of going up, it came down and it broke this former low point. So lower low now, lower high, a new low. Anything above this? No. So lower low, lower high. So clearly the daily is selling. Okay, daily is selling. So what is 4 hours doing? Daily is selling. Daily is selling, weekly is buying. What is 4 hours doing? Okay, so this was the lowest point. This is the lowest point I can see. So this is a lower low, this is a lower high. So anything above this becomes a higher high. So we have a higher high here, higher low, and then it continues all the way up. Higher high, higher low, higher high, higher low, higher high. Nothing went above this again, and this was the previous low. Everything started selling. Lower low, lower high, lower low, lower high, lower high, lower low. Then a new high again. Higher high, higher low, higher high, higher low, higher high, higher low. So now, with these inconsistencies in the 3 time frames, it means that I'm no longer interested in this particular pair, because you have to be very, very, very much careful. The first thing is you need to make sure you have 2 at the barest minimum, but I like to go with 3 time frames in sync to just save you from doing the wrong analysis. So you need that as a major confluence. So let's check XAUUSD. Is not let's check XAUUSD. Where is XAUUSD? Let's search it up. X. I don't know, it seems like my system is hanging a bit. I don't know, it's hanging. So let me try it again. Sorry if the video is blurry. I'm having to use my hand to hold it, and do the analysis at the same time. I think I pretty much dismantled my tripod, so having to fix all of that. So let's just search all. XAUUSD, you can see it here, but most times if I search it, it doesn't come up. You can see it here, so let's click on it. from doing the wrong analysis. So you need that as a major confluence. So let's check XAUUSD. Is not let's check XAUUSD. Where is XAUUSD? Let's search it up. X. I don't know, it seems like my system is hanging a bit. I don't know, it's hanging. So let me try it again. Sorry if the video is blurry. I'm having to use my hand to hold it, and do the analysis at the same time. I think I pretty much dismantled my tripod, so having to fix all of that. So let's just search all. XAUUSD, you can see it here, but most times if I search it, it doesn't come up. You can see it here, so let's click on it. So this massive sell here, I saw it I hoped for it to happen last week, but I didn't like the inconsistencies, just like we have EURUSD, so that's why I left this pair completely. But look at that massive sell, and this is based off of my trading strategy. Some persons caught it last week. What's happening? The cursor is not moving. Okay, but like I was saying, this inconsistency, there was an inconsistency in the time frames that made me to avoid this trade, but this move was massive. People who caught it made a lot of money last week, so happy for them. Let's go to the monthly as we always do. I believe we should have a little bit of consistency now with this sell that has happened. We're able to look at the market. So, but let's see if it's not giving us any clear direction, we avoid it yet again, because there's a lot of inconsistency with. If you look to the left, market hasn't been this high for gold in over, look at this is like 2010. This is already over 10 years plus. Market hasn't been this high. So you can't say if it's going to continue to buy or if it's going to continue to sell. So let's go to the weekly to see if we have a little bit of clarity on that. Now, this was the last consolidation point, and then it broke up. Now it has broken up. And clearly the weekly is buying, because this is the highest high and this is just a higher low. So that move that happened was a very, very small move, but on the smaller time frames it is a heavy move. Now weekly is still buying. How about the daily? As the daily shifts, we have the higher high here, higher low. Okay, and this is another higher high, so this makes it the previous low, and we have a very clean break here, lower low, lower high. So daily is selling. How about 4 hours? We have this higher high here, and this will be the lowest point, right? So everything there ranged until this point. So it broke lower, lower, high, lower, low, lower, high, a new low. Is there anything above this? Yep. We have the higher high, higher low. Instead of continuing to go up, it broke down again, lower low, lower high. So daily and 4 hours is selling. Let's just be sure. Lower low, lower high, lower low, lower high, a new low again, and then right here we had a very, very, very subtle. Let's expand that a bit more. Okay, put the cursor well. You can see, if you look closely, you can clearly see that this cursor that you can see, we have a little bit of move above it, a little bit of move. So that is a new high, right? And if this is a new high, where was the former low? This point, right? So if this point was the former low, because this is a lower low, lower high, and then it went all the way up. So this is the former point, and it clearly broke it. So lower, lower, high, lower, low, lower, high. Instead of continuing down, it went up, right? So this is again the higher high, higher low, and then we have a break underneath it, lower low, lower high. So but because of this little bit of uncertainty about XAUUSD, I'm going to be very watchful on this pair. I need to analyze another pair. I don't like to analyze beyond one pair, just to avoid what happened last week where I was trying to trade the two pairs because I was so sure of it, you know. But XAUUSD is one pair. We can see the market is selling, but would definitely just need to be on the safe side so that I don't break my trading plan. I have to analyze another pair for the week. So now we have daily and 4 hours in sync, and it tells me that the market is selling. Only the weekly is buying. So now on the monthly, we've seen that the market hasn't been that high in a long time. So possibly it might sell and continue to sell, who knows, you know. But now it's time to plot area of interest. Okay, now this was where the market closed, so we need a beautiful rectangle clone. Did that clone? Let's do it again. Clone. Okay. A beautiful rectangle right here. Okay. To help in plotting a solid area of interest. So let's bring this down a bit to touch here. Alright. And that should be good. So this area of interest doesn't look so much like a respected point, because I don't seem to have a lot of touches. I can only see 1 and 2, right? Unless it is widened all the way down. So, and even if it's widened, there's no guarantee compared to what happened here, because the market hasn't bought this high in a very long time. Okay, so this is another reason why I want to analyze another pair. So if I look at it right here, I have touch 1, touch 2, touch 3, touch 4, 5 and 6. 4 hours apparently seems to respect it. 4 hours apparently seems to respect the area of interest, but on the daily we really have 1-2 touches, so it's not so much of a respected area of interest, which means the market could move however it wants. But now the next thing is we need to see, how did the former week close? Do we have a week? So we had a lower low and then a very, very shallow lower high. But here's what happened. The week closed with a very, very strong wick to the downside. And remember, once there's a wick on the downside for the daily, the market is certainly going to feel it. So there's a high possibility the market is going to continue to sell downwards, but now there's no certainty of where it's going to stop because of the area of interest that is not so respected. If it comes all the way from here down here, which has a lot more clearer area of interest, that is like 1,000 or so pips, so we can't see. So now we'll go to the 1 hour. A beautiful area of interest right there, right? This is where we're going to plot our risk to reward, and seeing that the market closed in a beautiful, let's look at that on the daily, lower low, lower high. So the market might open, okay, the day closed reversing up a bit. So what does that mean for the 1 hour? The 1 hour means it was buying up, so the markets might open selling. That's like the funniest thing. So that's another issue with this pair. So it might open selling right away. So since this is an area of interest respected, it might break it, subtle bit of retest right here, and then continue its way down. So let's draw a path to that. So break, retests, probably all the way here, and then sell. So let's refresh this to avoid that. Let's refresh it. Okay, so back to XAUSD. Okay, it's right there. XAUSD gold. So we're on the 1 hour. Now you might want to ask, how do I know how to draw this part right here, right? Now look at where the market closed. It's more or less like it is respecting what has happened before, usually where the area of interest was formed. Now if you look here, market was buying here, it got here and it came back down. Similar to here, it was buying and it got here, came back down. Similar to this, it was buying, got here, came back down. If you look left again, similar. Here came back down. Here came back down. Even here came back down. So what does that tell you? The market is here now, and we have 2 time frames in sync that says the market is going down. It means having bought here, it's going to break and retest this area, all these points, and then continue to sell downwards. And that's why I see it's coming back to this point here. So that's like roughly 114 pips, or more, depending on where the market goes before coming here, right? So, but like I said, there's a high possibility the market is going to open pushing down, and we don't know the momentum. So, and this is gold, so it might actually just book before retracing back. We'll see what happens with it. So let's put our risk to reward right there. Remember, we're working as though we're trading with a prop firm account, right? So our stop loss should not be more than 20 pips. It may not be up to, because of the size of account we're using, which is $4. So we might have like a 5 pips or less stop loss, just to practice, the prop firm respect. So like I said, I'm expecting market to retrace up here, somewhere around here, before it continues to sell. So let me refresh this before what normally happens anytime happens again. So stop loss will be adjusted, take profits will also be adjusted once the market is done refreshing. We're going to analyze another pair. We trade and we watch the 2 pairs. Anyone that gives us the opportunity is the one we are going to trade. Okay. So XAUSD is what XAUSD is what we're analyzing. So we click it. Okay. So like I was doing, I'd already put my risk to reward. So now let's draw this to the take profit zone, somewhere around here. I expect it to get there. And then if you look here, this risk to reward shows a 1 to 1.75. It doesn't make sense. So stop loss needs to come down. I don't know why he's giving me this figure. It's very odd. I'm not really understanding this figure right here. Okay, so I don't expect the market to go beyond this point. I don't expect it. If it comes all the way here, we're still good, but I'm trying to check out this stop loss. I don't know, I'm not understanding what it's doing. I'm not liking this reading. So what I'll do is, if this is my entry point, let's use a calculator. My entry point says 41301. Alright, so if I do, I'll have to do a minus where stop loss is 4175. So this is okay, let me do it this way. 4175.383 minus minus 4131.834. Now that gives me exactly 43,549. So if I round this up to, it's not really making sense. Anyways, now when I look at this risk to reward, it shows me that I have a risk of 1 to 3, right? I don't like these figures. This figure is supposed to show me how much I'm risking. Okay, this is a percentage, 1.05%, but this figure is supposed to give me like a more clearer figure, but I don't really understand this, except if I'm going to work with this, which is showing me like a 43 pips stop loss. That's way too high, and it makes sense, especially because of the fact that this is XAUSD, which is very volatile. So any small move can get a lot. Any small move against you or in benefit for you can either give you a lot of profits or give you a lot of loss at the same time. So this is like 21 pips stop loss, which is still a lot, right? So ordinarily my standard is 20 pips stop loss. So let me see if I can adjust it a bit and just leave it at, no, let me just bring it to 19 because of this decimal points I'm seeing there. So let's leave it at 19 pips stop loss. So what that means is, if the market moves against us, right, and I'm risking 0.01 in the market for XAUSD, this is an equivalent of $1. So if the market moves 19 pips times 19, we've lost, right? We moved 19 pips, we've lost $19, which means this account is blown. Okay, so trading a small account with this particular pair is a bit tough. Okay, because even with this, the market is still blown. The account is still blown. So we have to watch out for this pair crucially to make sure we're doing the right thing. Okay, ordinarily we're looking for no more than 2% loss. This, right? But now we're looking at 0.46 divided by 100. So this pair is not our prime. This pair is not a very much prioritized pair of mine, but we'll have to look at it, because if it moves in our favor just here to here, we could get as much as 100 pips gain just from this small move. And 100 pips, if we use the same example, 1 times 100, we might make maybe like $10 or more if this goes all the way here. Because when it gets here, I expect that when it gets here, it's going to retest. Now this retest might continue downwards, or it might continue upwards. But like I said, I usually use this to analyze my pips, and this figure is a bit awkward, so I'm not getting an exact figure. But if based on what I did, we have a stop loss of 4,153.0077 minus 4,131.834. So entry point still shows us roughly 19 pips thereabouts in stop loss. So this is still a lot. So I have to keep an eye on this to make sure that it's going in our favor and not against us. If not, it's going to blow that account for sure. Okay, so now let's look for another pair. So last week we tried NZD CAD and USD JPY. So let's go back to GBP USD. Let's see what's happening there. GBP USD. Let's see what's happening here. If this can be our second pair for the week. A lot of movement for this pair. So right here, this is where the market is at the moment. It's selling. This is October 2025. Let's look for 2024 October. So October 2024 showed that market was selling. That's October 2024. Let's look for 23. 23 was also selling but about to retrace. Let's look for 22. So 22 started buying and 21 was also selling. Okay, so meaning that October is usually selling. In the last 4 years it has shown that. But if you look here, you see that when market gets somewhere around here, it retraces back down. Same thing happened here, retraces back down. Same thing happened here, retraces back down, and here as well. Okay, so let's go to the weekly to see what the time frame is showing us. What is it saying? What is it saying in the weekly? Higher high, higher low. This is the highest point. You can't see anything above it except wicks. So where was the former point? Somewhere around here, because this is higher low, higher high. Okay, higher high, higher low, and a new high. So this is the lowest point. Right? So now the ending break clearly here, lower low. Instead of a lower high, it now retraces back up again, higher high, higher low, higher high again, higher low. All this was just a week, right? Now if this is the higher low, the former point, anything below it becomes a sell, and this was the lower low, lower high, lower low, lower high, a new low. So if this is a new low, where's the previous point? Here, nothing above it. So weekly is clearly selling. Weekly is selling. How about daily? Daily, this is the lowest point I can see here. So from this point all the way is a low. So lower low, lower high, nothing broke above this. So this is a lower high. Dance, dance, dance. All this is called dancing. Anything above here now becomes a shift, or below here becomes a shift, and here we have a shift here. So anything, this is where the market broke above this point and this point, because this was the former low. So anything above this becomes a buy, and here the market broke above it, so here and here, so this becomes the higher high, and it's supposed to have a higher low to continue to the upside, but instead it went below this. So now that becomes a lower low, lower high, lower low again, lower high. So now we're looking for anything above this to become a buy, or anything below it becomes a sell. So lower high, and it went down again, lower low, lower high. So is there anything above this? Clearly not. Anything below this? Clearly not. So daily is also selling, lower low, lower high, as you can see. But now let's check. This was a head and shoulders pattern, left head, right shoulder. When did I plot this graph? Left head, right shoulder. So right shoulder broke this neckline, retesting these shoulder points, and now it's selling. So, and this is the daily. So I'm not sure how much sell this market still has, because this has already done break, retest, sell. If at all, it might just sell a little bit down here. That would be like from here to here to here. This is like but what I see is the market has already sold. So this is another uncertain pair. I can clearly see a wick that wasn't filled here. Maybe it might be filled, maybe not. But this is no longer a guaranteed pair of mine. Just like the XAUUSD. So, two big time frames selling, and it's obviously now clear because of the head and shoulder pattern. Right? The market closed bullish, as you can see on the 4-hour time frame. And when it comes to area of interest, the market is still within the area of interest. It's still within it. So we have touch 1, we have 2, we have 3, 4, 5, 6, 7, 8, and we can keep going and going. Okay, so let's go to the 4-hour. This is a very big area of interest anyways. 1, 2, 3, 4, 5, 6. So area of interest confirmed. Then let's go to the 1 hour. 1 hour, what's happening here? So market closed ranging a bit, but it was still selling, lower low, lower high. So I would like to a part in the belief that the market is going to retrace up a bit, retrace up, before it to sell just a little bit downwards. So let's refresh this. This battery is low. I hope to be able to record for you. but I'm likely not going to take a trade tomorrow, because usually beginning of the week is not really the best time to trade. Sometimes trading opportunities present itself, like XAUUSD already shows it's already about to sell once the market opens. So if the market opens tonight and it moves the way to set up against tomorrow, then there will be a trade for tomorrow. If not, wait till Tuesday or even Wednesday, whenever the market is ready. So let's round up GBP USD by adding our risk to reward. I have a low battery on this phone, so just in case I'm unable to update you guys until I get to work, as the charger is at work. I didn't bring the charger, so I'll check. Okay, so retrace up here a bit. Why here? Because when I look to the left, I can see a reaction point here, 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 and here. So I believe it will just retrace up a bit here and then come down. So risk to reward. Looking for a short position to continue the sell. We'll wait to see what the market does. Let's refresh this. By the time the market opens, Asian session tonight, Nigerian time, 10 p.m. That will determine what will happen on Monday or on Tuesday. I hope I'm able to finish this analysis before the battery dies. If not, you guys will see the final pair I trade. Okay, but so far the two pairs I've analyzed, they don't seem like my best pair. It's just a probability, and to confirm it I would have to observe the market, observe market movement. Okay, so we're plotting risk to reward right here. This area of interest I plotted is really big. It's really big, so I'm expecting market to move just a little bit thereabouts. And as you can see, which is what I was trying to explain to you on XAUUSD that was not so clear for me, you can see it right here. Here this is a number, here this is a percentage. When you look at the risk to reward, you have a 3.4, but you can clearly see how many pips you're about to lose. Okay, right here. So I'm going to drop this down a bit. I'm unsure now if it's me that is no longer clear on how to move with stop loss, or my analysis is stop loss, because this is now sounding a bit strange to me, but I'll look it up and read up on it once again, guys. But no more than 20 pips stop loss. Easiest way you can do it without having to worry about these numbers that I am worrying about right now is just to multiply where your stop loss, subtract where your stop loss is from your entry points, and you know how much stop loss you have. Okay, so there my stop loss is 1.3. Let me be sure. Stop loss is 1.339962, right? Right. So guys, I will try to make this video very short, because most videos that I've been dropping are very long, and only people with patience will be able to watch it till the end. Like I've said before, trading is the only form of revenue that cannot end unless countries of the world decide to use just one currency. Okay, and with the growth of social media, Forex is certainly going to just keep growing and growing and growing, even with the crypto markets and all of that. Okay, so now it is the easiest and fastest way to make money without worrying, and you can make it from anywhere in the world once you have the skill. The most important thing is the skill. I say it again, it is the skill. Do not worry about how many years it will take you to learn the skill. Just focus. You know the way you used to focus when you are eating, like when you are really hungry and you get food, the way you focus for that 5, 10, 15, 20 minutes. That's the kind of focus you should just focus on, learning the skill. Trust me when I say this, it's more important than that university education, whether it's your first, second, third degree. In fact, it is more important than anything you can imagine. Obviously, of course, no more important than a human life or God, But what I'm trying to say in essence is this. I remember starting trading and, also wanting to just have some sort of independence and all of that. I'm still at my workplace. As you can see. Let me try to just get straight to the point and not talk long so that this video is not too long. But I analyzed 4 pairs this week. If you guys remember how I started this month, the first week I wanted to trade NFP because I was trying to fine-tune my strategy. US markets, economy was on shutdown, couldn't do that. The second week I went back to my strategy that I already learned last year, tried to see what I'm doing wrong and apply. Traded the first week, I over leveraged and I got out very soon, but I still made about 80%. Third week I wanted to reduce the leverage and maintain stop loss and all of that. I did that, made another 80%. Right now, this is the 4th week. Okay, no, before this week, last week, I took another trade. Wait, let me retrace back. After the first week, NFP week, nothing happened. Second week, over leverage. Third week, I then took a loss. But the loss was because I had analyzed 2 pairs, and what happened was, one had already given me my a good profit margin, but because it had not gone to my final take profit where I margined it, I stayed in the market. Okay, I closed out rather, and then I used the proceeds to trade the other one. Now the other one, apparently when I was entering the market, it had already gone. I should have just left it, right? So what now happened, it started dancing into my stop loss back and forth, And at the end of the day, it didn't really give me the kind of profits that I should have gotten, in comparison to the losses, right? Now remember, except for the second week, all my entries usually went into my stop loss first before it now started moving. My stop loss, because it's very, very small, because I'm trading a small account, I'm trying to practice risk management as well. Anyways, this week is my highest week so far. In the month of October, I'm trying to practicalize everything I've learned, stick to risk management and all of that. And I've already made about 200% plus on my account. So how did I do this? I took a trade last night, yesterday, not even last night, sometime around this time I entered the trade. And I left it all through the night, and it moved around 5 a.m. right when I woke up. I opted out at 6 a.m. because I saw it was going to retrace back as London session is about to kick in. Some minutes back, I re-entered. So now I had already withdrawn my profits, and I still re-entered again and still make back those profits that I already withdrawn. So what am I trying to say in all of this? 4 markets were analyzed. I only had 1 market that I felt very confident about, that I wanted to trade. But it was not ready on Monday. Another one was ready on Monday. And right now, all 4 markets have already given a very, very nice take profit. And I still see this particular market continuing the push down next week, depending on how this week ends. What does that go to share with you or to show you? Trading is like a lifesaver. Whoever started it, kudos to you. Because people like us who have big dreams and a very, very strong mindset to accomplish things have now seen that they can achieve it. Okay? And it's all because of Forex trading. So you out there, you might be watching me now, but 200% is a lot. It's looking small because of the small account I'm using. But imagine if it was $200, you're trading with $2,000, $20,000, $200,000, $2 million. Just imagine how much you'll be making right now on just one trade. One trade. Which business wants to give you that kind of money? Which business? Even if you are stealing the country's money. If you're watching this, I advise you go learn Forex trading. And the sweetest thing about it is not something that you can hide. Even if I share it with you now, you will still come after learning and make your own money. That I am making does not stop you from making. So I'm documenting it now. By the time you guys start seeing me balling, you say I'm doing Yahoo. This is how the Yahoo started, bro. I'm sitting here at my workplace monitoring the market. So don't say I did Yahoo. I did not kill anybody.